Good afternoon. Welcome to OptionsTender. It's Saturday, March 15, 2025. We're changing our format up. If you were with us yesterday, we talked about doing during the week a much more in-depth kind of using a scalpel with our indicators and on the daily and the 65 going around the horn on the indices, really getting in touch each and every day of what the market is doing. Okay. And then on the weekend, whether it's Friday or Saturday that we put this video out, we'll do the top-down analysis down to the daily time frame. We'll leave the 65 for during the week. And so we can get a perspective, which is super important from the top down. Okay, so super excited about this. I added indicators. I took some of our favorite indicators from each of my different setups that I have. I took my favorite ones out of there and put them into this new video format. Now with this higher time frame video, we're solely going to work with the moving averages. We'll check out the DMARC, our typical options tender setup, and then at the end on SPX, we'll use the McClellan summation index. So this one will be just weekly, and then we'll look at the McClellan index or oscillator during the week each day, to check out these divergences and see where the market could go. Okay, so overall, our trade bias as of this week is bullish. We're looking at the sentiment of the overall, retail traders, so being extremely bearish, and that's what's making it a contrarian type indicator for the bulls to take over from here. Now we'll go through the options expected move at the end of the video, and we're looking for this structure of the market. I'll keep you in touch of what I'm looking at in the primary wave 2 of this new dead cat bounce. All right, rip your face off rally. I think this week we'll build a little bit of structure, and then going into next week we'll have a pretty raging move to the upside. Okay, and I'll show you all this into detail from the top down to the daily. Okay, anything else? Oh, I didn't update this secondary. We'll update this as we go, so don't pay attention to that yet. And we'll talk about that when we get on the lower time frame. Okay, so starting off with SPX on the monthly time frame. Once again, we have been emphasizing the historic trend lines that we've been competing with price action wise. We have the 1929 top, the 2000 top, and that's going in confluence with all this 2025 right up here, this candle, right? So we have 2008, 2021, and we're coming into that confluence, and we're actually rejecting off of there for the fourth time, had an indecision, and now we're getting some follow through here. So my guess at this point is that the month is clearly not over. We have a half of month left in March, and I think we'll get this bounce into the end of March, testing back in this area that consolidation was in, just to make sure that price action can test. It loves to do that on every time frame and then continue to the downside. And for you bulls, you're looking for this to be some sort of wave 4 structure and breaking these trend lines and getting to new high. And even if you're just the slightly bullish person that thinks we make a new high and test these trend lines up here, more love to you. I just don't think we're going to break out from above these trend lines. And if we do, then we're traders. We have to, respect that. So price action is getting into this consolidation type area. So that's where we're making a bounce here. All right, let's go around the horn. SPY. SPY, we only have information back to the 90s, so that's our 2008 top, 2021, and now with the moving averages, we're looking at breaking down from the 8 EMA, but I don't think it's going to be that simple. We're probably going to get back up into this zone here to test back, maybe mid-zone, anywhere from 5, looking about 594. Maybe let's call it on this time frame, such a large scale, 590 to about 600. Okay, maybe the top of the zone there, but that's what we're looking for. Getting in this consolidation area is showing some sort of bounce off of this 8 EMA, and we'll see if we can hold on to that. Looking at the DMARC. From this perspective, we had that 9 count exhaustion. We did end up going higher, but did break down from there. So it proved to many times the exhaustion will show that the trend is done, and we look for a counter trend. In this case, we went higher a little bit there, a little bit higher there for 2 months. In this case, we went higher for much more time. So no indicator is perfect, but it can give us an idea of when the trend is moving, or at least needs to consolidate. And we did get that consolidation in this area too, okay, until the breakout. So we have to match these indicators with others, and that's why we don't just have one that we look for. And on the options tender setup here, we have the MACD. So with that MACD, we're not getting the crossover yet, but we did have negative divergence here when we were making new highs on the histogram. So that histogram right there was the new high, started losing momentum. So that was showing that these two lines were converging. And that's what the MACD is. It's a moving average convergence divergence. And so we're looking at this making a crossover here pretty soon. I would imagine getting a month or two of negative red bars, and then we'd probably get our crossover. That'd be our sell signal on the MACD. We don't have that yet, but getting really close. And on the RSI, we had the negative divergences, made new highs on the market, and made lower highs on the RSI. That was indicating that we were getting some weakness, and then price dropped out of that overbought area at the 70. That 70 line is where it starts, and we broke down from there, indicating our sell signal. Now we can use basically trend lines if we want to, and we broke down from that trend line. Use them a lot more often on the lower time frames. So that trend was up, and now we're breaking that trend, and this has been building up for years now. So it's no secret that this is going to oscillate all the way through, and we're going to have a bear market. Okay. We had our peak, and then all of these negative divergences over time. This move is exhausted and done. All right, and even on the slow stoke, we had our negative divergence, and we're getting that sell signal on the monthly time frame. Big move incoming. And again, you can draw these trends here, and we broke down from that trend. Let's move over to Qs. Now we're only going to use the oscillators and the indicators on the on SPY. We'll just get a visual of the traditional look here on the Qs and the other indices. Okay, so we have the 2000 top there, along with 2021, and we're trying to break there. We're probably going to trade around it on this monthly time frame, maybe get a wick, and then we'll look for a breakdown from there at that point. SMH. All the way back here. Now, a couple ways you can draw it, but this was the most steep one that we're looking for there. And this was back in, 2011? Already made a bottom from the financial recession. And just lining these 2 points up here we had some rejection off of there, and a big bear flag that couldn't quite get back there. Now we're starting to break down. So we're underneath that 8 EMA. Again, I think we'll backtest into this this consolidation zone. I mean, for months and months, this was just going sideways, trying to hold that 8 EMA. You see the weakness. Got all the way to the 20, and that's holding this pattern so far. And I think price will probably get back into those zones, 240, 245, just to back test and then break down once again. So you can probably draw a triangle in there, or at least a bear flag. IWM. IWM has these trend lines. You had some negative divergence up here. Then we drew a channel. That was some confluence there, and I do think that we'll backtest this channel. As a matter of fact, I think we'll break it eventually. So this pattern, we're not going to look at the Elliott wave, but I'm looking at this as being at minimum for a correction, an A, an expanded B, and we're looking for C, probably to get into that 200 moving average there. This trend line is likely not to hold. We only have 2 points there, but we'll keep it there for reference at that point. And then we have the mid-range that we kept an eye on, and price was having trouble getting back on top of it. If it would have got on top of it and held, probably could have went higher at those points. We're into the moving averages again, so it's very clear that we're going to get some sort of bounce at this point. So you have the 20 and the 50 moving average, much weaker than the rest of the markets. And we're also into this consolidation area. You see the top of that zone is right about here at, let's just call it 200. And you see that there's lots of support, lots of resistance going there. And the zone gets thicker, so price is able to get down lower. You have much more volume down here at 190. So, this might not be done yet. But with the moving averages, and you have lots of support, resistance here, support, we're at that zone, okay? We're at the point where we should bounce. And perhaps with this being much weaker, maybe we don't really even get above the 8 EMA, or we're just not going to hold above and we have a wick, just like this candle here. On the VIX, just starting to work its way from this historic top here in the 80s. You see a downtrend, and now we're starting an uptrend. So we'll keep an eye on that. And not a whole lot to report there. We're getting on top of the moving averages, but no clear breakout at this point. So we'll keep an eye on that on the weekly basis. Let's go back to SPY and go around the horn on the weekly. On the weekly time frame, bearish rising wedge. We broke down from it. We're underneath the 20 and 8 moving average. So therefore, the 8 EMA exponential moving average is our momentum indicator. The momentum is down on the weekly time frame. The 20 moving average on the weekly, extremely important, is the trend indicator for us. Okay, so the trend is down, momentum's down, but we're looking for a bounce. We're into major support, and on the weekly basis, we got back a wick, stick save, as some people say, back above this important breakout zone. So we're just back testing a breakout, right? So I do suspect we get a bounce, and you're going to have a ton of bulls jumping in, probably mostly retail traders. So we're going to get some momentum, and you have the 20 moving average at about 594. All right, and maybe we even get a wick through it to test the top of that 600 area that I was talking about. But it's not unheard of for us to get consider this 1 week, 2 week of follow through. Next week should be a nice move. And then the third week, maybe we get another doji candle headed to, headed lower at that point, dead cat bounce, lower high. And, although I argue that this is a bear market and that we're getting into a recession, I don't have proof of that yet. This, to me, is a 5-wave move down, but there's no market structure to the downside. Okay, we have a low, but we don't have a lower high. We don't have a lower low. So in a technical sense, the structure is still positive. All right, so that's why I think we're going to get a nice rip your face off rally. We're going to test that for the kiss of death underneath the 20 moving average. We get above it and stay above it, we're going to go higher, right? And maybe back test the historic trend lines once again. I don't think that's the case, but you know, just like this move here, we thought we were starting that bear market. Clearly, we didn't get a big move down there. It was nice, tradable. But we made new highs. Actually, I think 3 more times. All right. Once again, we'll just check out the oscillators. DMARC made the 9-13 sell count. Didn't quite make another 13 here. Failed before it happened. So we didn't have a clear setup. I know there's another 9 there. Didn't have a clear setup for the DMARC. On our options tender board here, we have the MACD. We're making divergence. Each time we made a new high, we're making lower high in momentum. So that was giving us conditions that we knew a reversal was coming. Obviously, we didn't know when. And we actually made a new divergence right here. So it was a slightly a steeper divergence, all right? So that's why the line is extended down there. Now momentum is to the downside. The histogram is clearly down. But again, we're into support. And we're going to see likely this oscillate all the way to the downside for this larger wave 1. We should see this oscillate all the way down, right? And so then we should have a nice big bounce. So the momentum, I would suspect, is going to trend down. And right now, it's probably just going to test the and converge, and then diverge and converge and diverge from that blue line. But it could cross back above, just like on the bullish stance here. Throughout the trend, you could give a whipsaw test back there and then continue. So I suspect that's what will happen here. And even you might have larger corrections where you do get a full tradable bounce, like what I think will happen when we get that nice 5-wave move down. I think after wave 1, we'll get a nice wave 2 and continue all the way down, okay? Now on the RSI, on the weekly stance, we're oversold. So that's where we're looking for a bounce. And then we can continue. When this 5-wave move or 3-wave, if you're bullish, whatever ends up happening, by the time this is done, you should see a nice divergence and oversold conditions and start to get positive divergence. We're not there yet. We're just now playing out the negative divergence that we had with a 3 peak here. Boom. And you see the trend that we drew broke down, gave us a little fake break there, made new highs, diverged, and then broke down again, oversold. So we're looking for a bounce. With the slow stochastic, negative divergence, now playing out and oscillating down here, I do think we get a bounce and we continue to do this pattern all the way down till we get oversold and positive divergence. All right, this is why it's going to be so important for us to look on this weekly analysis to see where we are in this trend. Okay, let's keep the moving averages on, QQQ. On a weekly time frame, see we had our bearish rising wedge. We can even argue it broke down from there earlier if you line up our trend line from the lows here. But we want to put it right where that spike was, that drop down, the yen carry trade. And so that was our benefit of the doubt. We broke down from there too. And I suspect we'll back test. And it's likely, in my opinion, that we back test more of this type of zone right here. I think we'll back test a little bit higher. I think we'll go back into this zone that we clearly made here, and we'll go test the 20 moving average, possibly around 514. Okay, but we're just underneath this 50 moving average, so it's not going to be easy just to zip through there. I do think we'll get a little bit of a pullback going into Monday, and we'll continue to build a little bit of structure here before a nice swift move to the upside. SMH. Let's change the board. You get this nice bearish rising wedge that formed here, a beautiful bear flag. Look at this geometric line there. So clear and crisp, and we broke down from there. Now, price is going to have trouble getting above 232, but I do think that with the volatility of this index, we just kind of slice through these supports and resistances, and I think that the 20 moving average, again, in this consolidation area, will be about the center of that zone right now. So we'll probably get back into that 245, and we'll check to see how this goes. And on the lower time frames, we'll talk about this again on Monday. I do have a way to count this as a 5-wave move, and now it's not pretty where you have such a deep wave 2, and then wave 4 is really tiny in there. But that's a rule of alternation that can apply. If you have a large move in wave 2, then you can have a small move in wave 4. That also goes for if it's a very big move, but it's sharp, like a zigzag, then you can have a sideways time-wise move in wave 4, or vice versa. IWM. IWM has this, and again, so you have this consolidation area. We made a high, and I think this was our initial move here, an impulse move, or perhaps an ABC. We have a larger degree A. We're making our B here, larger degree B, where we had an A, B, and then an ending diagonal, which you see the diagonal broke down. And now I think we're going to start back testing. We're in the 200 moving average and also the 100 moving average. Nice reversal candle off of there. I think the lows are in, and I think we'll get this dead cat bounce. And again, we'll have to look at this as, if this is the new top here, this could be an ABC and we make new highs. I think we have to try to fit in either 1-2, 1-2, or see if we can fit in a wave 4, 5 down here, where that's like SMH 1, 2, 3, 4, and 5, and this entire structure is correcting. All right, so we'll look for the 20 moving average. All of these will be looking for that 20 moving average to make some decisions. DIA. DIA also has a bearish rising wedge, also a channel drawn in here where we had some confluence, and we're getting into that 50-week moving average, holding on to that. This, this is a situation where it probably doesn't bounce very high. It just seems to be weak, but this isn't going to move the same as the rest of the market. So DIA is, I like to think of it in my head that it's just the counterbalance for whatever the market needs to do going into, for example, FOMC is on Wednesday, and let's say tech is really, really strong, but it doesn't fit that tech is going to just rip right now and the whole market's going to make new highs. This will counterbalance and hold down the market when necessary. And DIA will be a little bit stronger when the market doesn't need to go down any further, but you have a Tesla, for example, capitulating to the downside and dragging tech down. So I just consider this more of a counterbalance type thing, but we like to see what's happening. Everything's into support. DIA is also into support. The VIX. All right, we have a nice look at here in the VIX of drawn out here, the bullish falling wedge, broke out from that wedge that was a spike here and back tested, and we had this consolidation area that we were looking at, and we did break out from there, so we're back testing. But I think VIX is really going to get into this zone again, just like all the other indicators. And it's so volatile, no pun intended, with it being the volatility index. But I think it would get back into the moving averages, and this might even make it back to the lower end of this range here. So we have the moving averages a little bit lower, so maybe it holds on to those. Not in a straight line, but if the market is going to move up quickly and steep into a deep retracement, then I suspect that volatility will, it maybe even exaggerate that move and reset itself. So be careful with the out of the money calls that you have. We're probably, especially in the indices, because we're going to have a VIX crush, and that's going to take out some of the premium, the vol. So check out the Greeks video that I have, and that'll explain Vega, Vega, all the other ones. Sorry, Gamma, all the Greeks, your deltas, blah, blah, blah. Let's go. Last time through here. We're not going to go through all the dailies. Let's go through SPX in this video. So this is the first time doing it. We might refine this a little bit more if we need to get more information for the weekend, but you should get all of this information on the daily time frame and the 65 into the weekly videos. Okay, so we have SPX on the daily. We'll just give a quick look at this. We have this bearish rising wedge. We're underneath that 200 moving average, and we have the 8 EMA. So the momentum's down. We're going to have a tough time holding this support. That's why I think we're going to build some structure to get above. We got to have a setup, like an inverse head and shoulder or something like that, to get us above these moves here. And I think this is the initial, like we talked about here. I think this is the secondary move here, the secondary wave count. I think we're just in the wave A, okay? I think we have a smaller degree, and we'll go into this more detail on Monday. A, we're going to get a B and a C into probably the 200 moving average, and that means that we're in the larger degree wave A. So all of next week, maybe going to Friday or so, we're going to focus on wave A. All right, so wave A will probably end up here at the 200 moving average. Then we're going to look for a steeper or sideways wave B, and B's are, I don't think that will make a new low, but wave B can actually make a new low. It can have a triangle. It can be a zigzag, very sharp. Wave B's are very difficult to trade. They can be anything. They can be a flat pattern if it wants to waste time. So the easiest one for us is going to be to trade wave A up, and then be very light if we're going to trade wave B, and then look for that rip your face off rally going into the end of next week, or the week after is where we'll look for some continuation for a 5-wave impulse rip your face off rally. Okay, so we're in wave A. We'll concentrate on this week. We're looking for an A, B, C, and into an A. And then we'll look for whatever B is going into, possibly into the end of the week. And so at that point, we'll see. If this all happens really quick, maybe Monday, Tuesday, Wednesday, we end up with a big move on Friday, then so be it. But we just don't have timing on that. We'll be looking for this move to resolve into the beginning of April, so end of March, beginning of April. Okay, so that's still a fairly quick time frame there, where that monthly candle will probably have a nice big wick, and people start getting bullish and saying that's going to be the reversal candle, when in fact it ends up being a hangman candle, and price breaks all the way down to continue. All right, so let's go over to the other board here. Defaults, and I want to show you the sentiment. I think we'll do this weekly. We're looking at the Buffett indicator at 211%. That's way overvalued. That's why I think the bear market is starting, or one reason why. And we're continuing to look at the AAII survey was very bearish up here. Well, guess what? I don't have them, but they were a lot more bullish up here, and then they started getting bearish as price went up. I think that is a bearish divergence. That's why the move was happening. It wasn't that this is too bearish to be a high. I'm quoting somebody, and it's too bearish to be a high. I think that was a negative divergence, and it's playing out now. So we'll watch this this index to be much more bullish as price gets higher. Now, as of the reading of this last Thursday, which is way down here, I should have put it down below so you can see it better, but I'll keep it up here. That was Thursday. We're nearly 60% bearish, and I think that's a good indicator that the low is in. That would be a contrarian, like I said, extreme bearish contrarian move. We also have a fear index, the CNN fear index being at 21. Again, I think that is a contrarian move. It was a full moon also on the 14th where these indicators were, and we'll continue to monitor this. It's a brand new thing, and we'll not brand new for my channel, and so we'll continue to look at that quickly on the weekly analysis. And now, last but not least, our options expected move, and we've been really focusing on this in the Discord. So it's just consider joining as a YouTube member. It's 99 cents. You get the Discord and trade alerts with it. And also we have a lot of camaraderie where we chat in there and share ideas. We have some great traders in there that have a lot to offer. And so our options expected move here for this week is it's non-biased to the up or downside, but we're looking at a move that's about 140 points to the upside or 140 points to the downside. It's a massive move that the options market is expecting. And I think we will end up on the upper end of that options expected move here at the 200 moving average. I think that is the most probable move with this, but I do think we'll start off with a lower move, being our A, our B, and then our C. All right, maybe I should have gone through the Elliott wave, but we'll save that for Monday. Again, I think we'll start off with a B and then a C up here to test this upper expected move, the 200 moving average. It's not a coincidence, it's up there. And at that point, I do think we'll get our correction. That'll be the end of our up move. And these are very tradable moves. I mean, that's 140 points. By the time we have our pullback here and we start loading into more calls, we're going to have probably 160, 170 point move to the upside that is very tradable. And then again, we'll have a light trade for a correction. We don't know how deep that correction will be for the B wave. And once that's done, that B wave's done, we're going to have a large 5-wave move. Now, the bulls will say it's a 1-2 setup where we're going to wave 3. Doesn't matter. It's very tradable for bulls or bears, no matter who you are, the A, B, C, or 1, 2, 3. You're going to have a big tradable move there, and I think that will probably go into next week. So it's likely that we might even see this move go into the upper end and then retrace. And by Friday, we have another big move right back into the options expected move. I wouldn't doubt that. And then we get continuation higher going into the week after. All right. So our trading bias is to the bullish upside. We're looking at this being all of this stuff that I'm talking about being wave 2. And our lower degree, we're simply working on an ABC into a wave A. Okay, that's what I have for you this week. I hope this information helps, this new format. I'm super excited about it. We have these indicators that we're going to show you on Monday as well. And we're going to look at the marijuana market tomorrow. Okay, so check us out. Don't forget to like and subscribe, and we'll talk to you tomorrow.